There has never been a time in history with so much division, so much disparity. This is in every sense. We are witnessing a time in which people are prospering like never before, and others are having the worst possible situation for themselves and family. Instead of trying to resolve the crisis, the Fed only makes matters worse. Those in control are working towards their plan to fully destroy everything in their path, and it looks like they're doing a great job of it. You came here for the truth, so let me unveil that for you. At the time I'm recording this video, there is chaos going on all around the United States, and we can see that, of course, this was bound to happen. There is so many issues that have been underlying all of this. I can't get into them on the channel. Of course, we know what happens when you start talking about that, but I just wanted to make note of it. I want to acknowledge it to let you know that obviously I'm looking into that as well. There are others out there who will talk about it. Unfortunately, this platform can't be discussed. I want to go and actually look at what the Federal Reserve had to say. The Federal Reserve has been doing what they do for so many years, creating havoc and problems for the average person. The average person is dealing with so many issues today, the bottom 80% of people, and it's all because of the central banks and their activity. We're going to cover that. I'm going to look into what's happening with the jobs numbers. I'm going to give you the details you need to know. Let's get into it right away. I'm recording this right now on the 6th in the evening, and so you're looking at what has happened already. This is what I wanted to mention, the fact that the stock market is, quite frankly, ignoring what's going on. And what they're pointing to, what has happened right now, what has transpired, is that with all of the activities going on with Georgia and so on, it just means more stimulus, more supposed free money that's taking place that will, of course, benefit certain people, and they are really pushing for that. Stimulus is the name of the game, and so, of course, that's going to make the stock market move higher. It has nothing to do with the corporate profits. It's got nothing to do with what's happening with earnings and what the company's financials are and so on, and not at all. This is what we're talking about right now. This article talks about that somewhat as well, and you could see a change of control in the Senate is seen by some as a catalyst that could shift the types of stocks favored by investors away from names that dominated last year's rally. Looking at the tech companies right here, Alphabet, Amazon, Netflix, Facebook, and Apple, they are all down, as you see, not looking good because of what has happened, whereas the S&P 500 moved up. Now, this just gives us an idea, perhaps a taste of what we will see in 2021. I wanted to make that clear right now. We don't know what's going to happen over the next little while. At the same time, we're hearing that there is more likely going to be, a lot of overvaluation. These particular stocks not looking that good in the foreseeable future as it relates to those who haven't necessarily seen the boom that had come from all of that stimulus. So we'll see. It's all speculation at this point, but I wanted to just note that right here as we are at the very beginning of the year. So we'll see what happens. Fed's Bostic says bond buying recalibration could happen in 2021. Now, this was actually on January 4th, and I wanted to highlight what the FOMC meeting minutes had said as well. But just hang on for a second. The Federal Reserve could begin to trim its monthly asset purchases this year if things start to go better and the economy is boosted. Now, we're talking about the Atlanta Fed president here. This isn't just somebody out there, an analyst. This isn't just somebody that, sweeps floors at the Federal Reserve building. It is a Fed president. So we know that this individual not only is on the inside of what they're seeing, but has a lot of pull as well. This just gives us an idea of what we could be seeing, but we don't know, because the last time they did the tapering, it was a big problem. They called it the taper tantrum. And that was really so minuscule, so slow, that it was actually a joke when you see how really just non-threatening it was, and yet the market freaked out. And anyway, this is something, of course, that we can look at further, but it's again speculation. So I'm not going to touch on it too much. I'll show you what the FOMC had to say. Markets will get plenty of notice before the Fed cuts back on bond purchases, minutes show. If you want to take a look at them, of course, they are available on federalreserve.gov website. I just want to note the fact that what we're looking at here is yet more talk and no action. What they're referring to is that they're going to slowly but surely go away from how much they are printing. The treasuries, the mortgage-backed securities, they'll start to slowly bring that down. There's speculation, maybe it'll be 5 billion, 10 billion, something like this, and then let it go for a few months and see how the market responds to it, and then continue to bring that down. All as trying to be very slow and steady with the pace, trying to signal to the market, this is what we're going to do before we do it, to see how the market reacts to it, and so on. Federal Reserve officials agreed that the December meeting to make sure that the public gets plenty of notice before the central bank bond purchases are reduced. Look, they did that last time. When you saw Janet Yellen get up there and say, okay, in the future, the near future, we're going to start to cut back on our purchases. We're going to be increasing the interest rates a little bit further. And this was projected to be something very simple, very basic, and very structured. Every month it's going to be this, and then next month it'll be that, and so on. It was totally projected out into the mainstream. If you wanted that information, it was there. And yet the market still freaked out because they know they cannot get off of this. It has to always go up. The interest rates have to go down. Printed money has to go up. If they do this again, you're going to have problems. They only do this to maintain integrity. They maintain some level of face that suggests that, we're strong. We can do this. We can actually turn it around. But of course they can't. Now this one is pretty funny. Stocks, Bitcoin, and more. Unusual ways Americans are planning to use their $600 stimmy. That's a quote, stimmy. Some stimulus check recipients are considering investing their money or treating themselves after a tough 2020. But some recipients have kept their jobs and income and are able to cover critical monthly expenses such as rent, utilities, and debt. For them, $600 represents an opportunity to boost their savings spent on non-essential goods or buy stocks. On TikTok, where young investors have turned for investment advice, fantastic to get your investment advice from TikTok, videos on how to turn your stimmy, again, that's a quote, into thousands of dollars are making the rounds. So you're going to go to TikTok to get your investment advice. People are pointing at the screen and then random things are popping up. And that's just a fantastic graphical way to learn stuff, I guess, these days. And that's where people are going to learn which stock should I invest in. Well, that's not really investing, but regardless, this is what it's come down to. And there are people who have been I don't want to call it investing. They've been putting their money into the stock market probably for a few weeks, maybe a few months. And now they're giving other people advice. This is dangerous from top to bottom. Goldman Sachs nears a share price record. The stock's climb is a sign of how much the bank has profited from the financial chaos of the past year. Other financial firms have not fared as well. Goldman Sachs has been seen as one that's really, raised its head above the rest. I wanted to give you a little bit more insight in the biggest bubble in the world today, that is Toronto real estate. Toronto home prices reached a record in 2020. This condition that we are seeing right now today still continues, is driving demand for larger homes, and low rates making it easier for people to afford them. Check out the numbers here. The average price for homes sold in Canada's largest city last year hit $930,000 Canadian, the equivalent $734,000 US. You've got to understand that that is not justifiable. Price it in US dollar, price it in Canadian dollar, it's not justifiable. When you see what the average household income is, quite frankly, doesn't make sense. Now, we can look at the fact that, borrowing costs are so cheap. That's not making it justifiable at all. That doesn't make it at all, because the amount of debt that you have to pay back over the next 25 years, 30 years, whatever it is, whatever people are buying at, it is a serious problem. You can't say, well, you know what? That's the biggest investment I'm going to make, so I got to put in $1 million. For people that are making, let's say, $200,000, okay, that's fine. You can do it. You can make the payments and so on. But for other people that technically they qualify, but quite frankly, they shouldn't be buying it. Well, I mean, I don't want to put my own opinion in here, but I think it's crazy. The highest on record and up 13.5% from 2019. That just shows you the frenzy, as they use the word here, that has really been taken up, during this period of time, specifically with detached homes. The suburbs are seeing a lot of the boom. There's no doubt about it. Auto sales in 2020 are expected to hit the lowest point in nearly a decade after a volatile year. Demand for new cars and trucks is recovering. GM and Toyota outperform expected results for the broader industry. I'm not sure if that's going to be able to continue right now. There are certain areas of the US that are, they don't have the lockdowns. Their economies are definitely better off than some places like New York, but we'll see what happens. This industry has been one that has really suffered. There's no doubt about it that there is a huge cover-up going on, because there are millions and millions and millions of cars sitting in lots. I even covered the reports where they couldn't even come in to the port because they were actually so backed up in the parking lots where they were keeping these things. They did not have a place to put them. So you had ships just sitting out in the middle of the ocean waiting. That's how bad this is. And, there could be some demand, but I really don't think the amount of cars that they're producing are going to be able to be sold. And that presents a problem in the near future. ADP published their December 2020 employment report, and this is quite different than what we had seen for this last little while here, seeing minus 123,000, and that's the change in U.S. non-farm private sector employment. Small business down, national franchise down. It is a big situation that's been going on when you see areas that are getting shut down again. The companies, obviously, they lay off people. They do the whole furry furlough kitten thing, and you get this repeating process that's taking place all over. It's never a good thing to see how many people are unemployed, then reemployed, then unemployed, then reemployed, and it's just creating a mess. I wanted to keep you up to date on what's happening in the restaurant industry. OpenTable covers this information, and they call it State of the Industry. Restaurants open for reservations, and you could see that in the last few months, there had been a big change. Coming into that September timeframe, October even, it was peaking out on a global level. This is the global level, and that is approximately 80% at the peak right here. So we're looking at that on a global level. Remember, now we're down underneath 60%. So if I switch over here, I can give you an idea of what's happening, for instance, in the US. And you could see that it peaked out, 74, let's say, 74% around that time frame, and it had come down since then. You look at an area that, like Canada, doesn't have those warm environments, outdoor seating, and so on. So of course it's going to be hit harder. You can see the direction. Obviously, right now sitting at just over 30%, and it just, the businesses, the jobs, the people, their lives are affected by this. So if you want to check it out for yourself, just go to a search engine and type in OpenTable, and you could see I typed the word data after that, and you will get to see these results as well. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting the creator of this. Thank you. If you want to learn how to sell stuff online, you want to understand all the ins and outs of e-commerce, you can learn it for free, theamazongps.com. If you want to know what's going on in the financial system, I'm talking about everything A to Z, the central banks, in interest rates, all that. check it out. These two books, link in description. You got to check out this video right here. It is so important, so critical. I covered so much. Click it. I'll see you there.